ICT has acknowledged this London Killzone strategy for its insane risk to reward and its insane win rate, which absolutely blow your mind away. This strategy is insane. From when I've tried it, it's been insane. The results have absolutely shocked me. So I'm here today to share with you what is the ICT London Killzone, how you can trade the ICT London Killzone, and how to achieve the highest probability setups for the ICT London Killzone. And I'll be ending off the video with some real market examples for you guys. So let's get into it. Now, before I get into the video, I just want to go over my service, pass my challenge. You guys have been loving it so much. People are getting funded every single day. You guys do not want to miss out. This is a zero risk investment. I will pass your challenge 100% guaranteed, or your money back, every single penny. The price you pay us and the price you pay for the challenge. Furthermore, if you are still skeptical, you do not have to pay us a single penny until we pass your challenge. This is absolutely the safest investment you guys will ever take. As you can see, if you join the group, you can see so much proof of us passing people's accounts. People are even getting paid out. People are getting funded every single day. So guys, there's going to be offers on the group, so I join up. If you do not join, someone else will take your slot. They will be funded and you will not. So let's get back to the video. So before you trade the ICT London Killzone, what actually is the ICT London Killzone? So in short terms, the ICT London Killzone is a time-based strategy that focuses on certain time intervals which are highly volatile. We call these time intervals kill zones. Now, we want to trade in highly volatile times, as this is where we can catch the most pips and the largest moves. So, and a quick reminder to you guys, the time window is only there to say when we can place a trade. So before a time window, we let market do whatever it wants. So as you can see, market playing out, and here is our time delineation. I will go into times and pairs on the next slide, so stay tuned. Now onto times and pairs. As it says in the name, we're going to be trading the London Killzone, which is 2 AM to 5 AM EST, which is New York time, and 7 AM to 10 AM GMT, which is UK time. Now, for all my videos, for all ICT strategies, I really recommend you guys go on your trading view chart and configure it to UTC-4, which is in fact EST time, New York time, as ICT teaches all its strategies through EST time, and most people do, so do I on YouTube. So if you want to make it easier for yourselves, change your time to EST. However, I put it in GMT as well for you guys. So moving on to pairs, UUSD and GBPUSD, as they are dollar correlated. However, it also works very well on USD JPY. However, I recommend you guys backtest these pairs for yourselves and see what works best for you. So moving on to a quick step-by-step breakdown. Now this is just a summary. I will be going in detail on each specific step. So step 1, liquidity sweeps. Step 2, market enters order block or fair value gap. Step 3, market structure shift with displacement. Step 4, entry. And guys, make sure you stay tuned as I have a bonus entry model included. So that brings us on to step 5, which is our targets. Now, make sure you guys watch the video to the end to fully understand the strategy. If you guys miss a step, it might mean that you do not know the strategy fully. So it's really important you guys make sure you take down every single detail of this strategy. So let's get into the step by step. Starting off step 1, which is our liquidity sweep. Now with a liquidity sweep, this is quite simple. Now obviously with this strategy, we do not need to look for daily bias or any bias of the matter. So we'd simply look for a key liquidity level. Now what is classified as a key liquidity level? I have a few examples down here, but it's basically any major support, resistance, previous day high, day low. You guys can read through that yourselves. So out here, I have marked out resistance right here, or equal highs, relative highs, whatever you want to call it. So now market has taken it out, as you can see right here. That is my liquidity sweep. Retail traders that have placed sells on this resistance here are going to get stopped out. This is our liquidity sweep. These retail traders are taken out as liquidity, which brings us on to our step 2. From our liquidity sweep, we want the liquidity sweep to enter into a higher time frame order block or fair value gap. As you can see in my example, there's a valid order block right here. As you can see, I'm going to list you the reason why this is valid. Firstly, we have a nice engulfing candle right here, which leaves a lovely imbalance. Secondly, we do get a nice break of structure down here. And thirdly, our zone is unmitigated. These are all things that make our order block valid. Now, if you do not know how to trade order blocks, go make sure you guys check out my video on order blocks. That video is doing great. You guys are loving it. So now I've marked out my order block. I simply wait for my liquidity sweep to enter into this order block right here. Now, I'm not going to enter aggressive off this order block. As you know, it's a higher time frame order block, which means it is bigger. Now, this order block could range from 30 to 40 to 50 pips onwards. So it's not a smart decision entering aggressive on this. You want to wait for some sort of confirmation to happen to get your entry. So that brings us on to step 3, which is our market structure shift. Now, basically, market structure shift just signifies a change in trends. So if we are bullish, where we're having higher highs, lower lows, lower lows, lower lows, you get it. That means market will now change in trend, as you can see right here, with displacement. What does displacement mean? It means we get strong candles with a lot of volume, as you can see here. We get market come down quickly with a lot of volume, change in trend, change in momentum. So we must get a valid market structure shift, which is where the body of this candle closes below a significant low. So as you can see, the body of this candle here closes below this significant low. So this makes our market structure shift valid, and it shows us where market really wants to go. It shows us market is now bearish, market wants to move bearish. So now, after the market structure shift has happened, we want to start looking for our entries. This is our step 4. Step 4 is all about your entries. So now we've got on our market structure shift showing us market does want to go bearish, as we confirmed by the market structure shift. Now we want to enter off an extreme fair value gap formed from the market structure shift. As I said, guys, market structure shift is a weak market structure shift if it does not have displacement, and I would never ever use it to enter off, etc. So we've got displacement here, which has left a fair value gap behind, and this is the extreme fair value gap. As you can see, there's no fair value gaps elsewhere. This is the extreme fair value gap. So simply, I'm going to enter at the 50% mark. Now, why do I enter at the 50% mark? In most cases, market will always return to your 50% mark of the fair value gap. This is just a little trick I use to minimize my drawdowns. So enter at the 50% mark. You can use your fib tool, a GAN box, whatever you like to mark out your 50%. Simply set your limits and wait for market to hit. Now, a bonus entry model, which you guys can use. I will show this on TradingView later in the video, so make sure you guys watch that. This is the engulfing candle entry. So this entry I've back tested a lot, and I found it really works well with this strategy specifically. I love it a lot. So basically, you want to wait for your liquidity sweep, and instead of waiting for a market structure shift or anything else, you want to enter off the first engulfing candle you get. So as you can see, we've got, this is a different example. However, there's been a liquidity sweep. Now, you want to wait for the first engulfing candle. What is an engulfing candle? An engulfing candle is when the body of this candle closes below the open of this candle. So the close of this candle closes below the open of this candle. That is an engulfing candle. So we've got an engulfing candle here. I simply wait for market to confirm the candle, for market to close the candle and start the next candle. That is when I enter. And you want to be on the 1 minute time frame for this entry model. This entry model is so simple. I want you guys to back test this for yourself, and you'll see how well it works. Simply in your kill zone, wait for a liquidity sweep and enter off the first engulfing candle. Now, I'll show you guys on this example where we would enter. We get our liquidity sweep. And right here, we get our first engulfing candle. You'd enter right here where this candle opens. As this candle would have closed, you know, it's an engulfing candle, you would enter here. So, and as you could see, this trade would play out nicely. Which brings us on to our step 5, which is targets. Now, for targets, you want to place your stop loss above the swing high. As market may play out a little bit, you want to give market some space to play out. You want to let market play out. If you make it too tight, there's a possibility of you getting stopped out before market continues in its desired direction. So always give your stop loss a little bit of room to play. Now, as for targets, you want to target opposing liquidity, opposing order blocks, or fair value gaps. Now, opposing liquidity, I mean key liquidity levels. You guys can go to the other slide and see what is a key liquidity level. In this scenario, I have equal lows outlined, which I did target. However, if you guys do find an opposing order block or fair value gap, you can take your profit there. And guys, I can't stress enough how important it is to partial. make sure you guys partial on every trade. Now, it's up to your own personal preference where you want to partial. For this specific trade, you could partial at key liquidity levels as well, or order blocks. So first take profit maybe here, second take profit maybe here, third here. That's just an example, guys, but make sure you guys are partialing. It's so vital. Okay, now you guys know the strategy. I'm going to show you guys some real market examples so you guys know how to execute this strategy in the live market. So let's get into it. Alright guys, I'm on USD currently. I'm going to be breaking down this trade for you guys, showing you guys why I was successful and how I managed to catch this trade. So to start off, as you can see, it ran for 1 to 7 basically for around 40 pips. Now, this is an absolutely amazing trade. So to start off, I want you guys to go to your indicators and type in Killzones, and you'll see daily open, this one by Real Bart BTC. Now select that one and go to settings, and I'll show you guys how to configure it. Now deselect everything except London Open. Okay, so now you're going to go to inputs, London Open Killzone, and you're going to configure this from 2 till 5, which is our London Killzone time. And my time is on UTC -4. This is New York time. You guys should configure it to whatever time zone you guys are in. However, I do recommend you guys do configure your trading view to UTC -4. So now we do have the Killzone ready. I already have it, so I'm just going to delete this one. There we go. Now you have the time delineation right here, so you know where the Killzone is, you know where you can place your trades. So I'm going to remove all drones off my chart now, and I'm going to replay the market to about here. Now, what do I see? Firstly, I see this very nice order block here, and I'll explain to you guys why this order block is valid. Firstly, we get a very nice engulfing candle right here. As you can see, the body of this candle, the close of this candle closes below the open of this candle. Basically, the body of this candle is below the body of this candle. This is an engulfing candle. This shows there's been a lot of volume in this these candles right here. Secondly, we have market take liquidity beforehand. Now, if you guys go watch my video on order blocks, you know for an order block to be valid, it has to take liquidity. Now, this order block takes liquidity to the upside here, and then we get our order block right here. Now, we do leave a lot of imbalances with this order block, such as here. Market would presumably want to come and return to these imbalances, making our order block more valid with more confluence. So now, our first step is a liquidity sweep. So I've spotted this zone right here. I'm going to wait for this high to be taken out right here. So let's see what market does. Okay, there we go. Let's play out market. Lo and behold, market does take out that high, and we do tap into our order block. Now from here, I would hop onto a lower time frame, such as the 1 or 2 minute. I'm going to hop onto the 2 minute, and I'm going to play market out, waiting for my market structure shift. So which low do I want to see broken? I want to see this low broken. This is the significant low. So let's see if we get a market. Yes, and we do get a market structure shift right here. So I've chosen this level as the most significant low in current price. And as you can see, the body of the candle closes below this low. This makes it a valid market structure shift. And it comes down with displacement. As you can see, these candles are filled with volume. If I actually get the volume indicator out for you guys, you guys can see the amount of volume. The volume is higher in these specific candles. This is what makes our market structure shift valid. So we delete that. Now we want to look for our extreme fair value gap, which is where, let me open to the 3 minutes to make this fair value gap clearer, is right here. Nowhere else is there any fair value gaps. Simply, I'm going to mark out this fair value gap right here. From this point onwards, I'm simply going to enter off the 50% of my fair value gap. So I'm going to mark that out using a GAN box. So as you can see, the 50% is right here. Simply, you'd place your limits right here. Step away from the trade. You don't even need to watch it. Stop loss above the swing high, which is right here. As for take profit, now I do recommend you guys do partial. So I'm going to hop into the 15 minute and start looking for take profits. Firstly, I do see a lovely area of equal lows right here. This would be my first take profit. Second take profit right at the bottom of this wick right here. And third one right at the bottom right here. These equal lows. So now this trade did end up playing for the third take profit. So I'm going to play out this trade and show you guys. There we go. This strategy literally works like magic, as you can see. Smashed our take profit. Now, if I do play out the trade fully, you guys can see how much it really did play out for. So if you were to hold, you would have caught a 1-to-17 risk to reward. Wow. 113 pips. That's amazing. However, that is unrealistic, as what would you close the trade off of? There is nothing. No opposing liquidity, anything of the sort. So we are happy with our 1-to-6, 1-to-7. Now I'm going to quickly recap. So firstly, we did get our valid order block. I explained why it's valid. Secondly, we had market take liquidity in the form of equal highs. As you can see, take it, we've tapped into our order block. Now we've gotten our market structure shift, signifying the market does want to move bearish. Then we've marked out our fair value gap, entered at the 50% mark, and targeted opposing liquidity. It's as simple as that, guys. I see a lot of people on YouTube overcomplicating it. However, this is a simple strategy and it works like magic. So moving on to the next example. Alright guys, I'm on GBP USD. Now I am going to be showing you guys the bonus entry model. And just to add, for this entry model, you do not need a higher time frame, order block, or fair value gap. So let's get into it. So firstly, I'm going to delete all drawings off my chart and I'm going to replay market. So now our first step is liquidity sweep, and we already do have our indicator on, so we know when our kill zone is. So we're going to wait and let market play out. Before our kill zone, we just want to let market play out. As I said, guys, just let market play out. And what do we get? Boom. We get a liquidity sweep. Now, as you can see, market's taking liquidity with a lot of volume, as you can see clearly. Now, from here, it's simple. Simply just wait for the first engulfing candle you get on the 1 minute time frame. Now, I explained to you guys what an engulfing candle is. You want a clean candle like this. As you can see, this candle closes below this candle right here. So let's just play our market. The first one we see, we will simply enter off. Let me actually slow down the market. There we go. Okay, now there we go. That's the first one we get right there. Now simply, as soon as the candle closes, I would just enter. I'd be live on the market, just enter it. Stop loss 12 pips. You can place it right here. I'd place it out here just to be safe. Now, as for targets, hop onto the 15 minute. And again, guys, you want a partial. It's so vital. First take profit at this low right here. This is our first take profit. Okay, as for second take profit, could be anywhere here, could be here. This is our second take profit, for example. Now, as for partials, partial is all down to your own risk management strategy. I really can't tell you where the best place to partial is. That is down to every individual trader. Now, this would be our final take profit. I do recommend you guys don't be too greedy with it and try aim for something like this, something like this. Now, it is probable it will hit, and I'll show you guys in this trade it did hit. However, you guys just want to get in the market and get out, get your profits. So now let's just play out this trade. Let me hop into the 5 minute. And as you guys can see, this entry model and this strategy in general works like magic. So let me increase speed. Boom, there we go. We get a nice 1 to 2.5. And if I play out market, you guys can actually see how much this trade ended up running for. Okay, there we go. You guys can see this trade ended up running for about 57 pips now. It's about a 1 to 5, 1 to 4.5, which is amazing. It just shows the power of the strategy and how well it can work. You guys could be making a 1 to 4 in how long? Let's see. From when you placed your trade, from about 2 to about 7. In 5 hours, you could be making about 4 to 5% on your account if you risked 1%. That is amazing. Now, I'm on EURUSD again for the third and final example. So, I'm going to be breaking it down quickly, as I hope you guys have got a gist of it from the other 2 examples and the slideshow. So, first you're going to remove drawings. And as you guys can see, we have swept liquidity right here. As you guys can see, this is a clear liquidity sweep. And guys, I just want to add, if we take liquidity to the upside, we want to start looking for sells. If we take liquidity to the downside, we want to look for buyers. Now, onto our Killzone. Now we know we're looking for sells. We want to wait for our market structure shift. So, I'm simply going to replay market and wait for our market structure shift. There we go, guys. As you guys can see, this is a clear market structure shift right here. The body of the candle clearly closes below this low right here and leaves behind a fair value gap. Hold up. There we go. We leave behind a fair value gap right here, which we can enter at the 50% mark. Boom. Simply place our limits, stop loss above this high. As for targets, hop onto your 15-minute. Now, first take profit here, second take profit here, for example. Third take profit, I would place somewhere. Actually, no. I would finish the trade around here just to play it safe. I'm going to hop back to the 5-minute to let the market play out and just show you guys how magic this strategy really is. As you can see, market simply shoots down just straight away. This strategy is like magic. So, as you can see, we've secured a nearly 1 to 4 risk to reward for 20 pips. Now, guys, if you do this every couple of days, you guys can easily hit 10% a month on your funded challenges on anything. Now, if you're not funded, make sure to click the link in my bio or click the link in the description. It will be the first link. I'll get you guys funded, where you can start using strategies like this to start making profits on the real life market. Now, thank you guys so much for watching this video. I hope you guys learned something new. If you haven't, comment down below what you want to see next, or comment down below any questions you have, and I'll see you guys next time.